Okay. All right. So I basically wanted to go over a few chart indicators actually that I've been kind of testing a little bit lately. I'll go over a few different tickers so that you can kind of see that it's not always cut and dry with each one. So the first one is double EMA. It's using the EMA 50 and EMA 200, and it's basically kind of what Cosmic has already touched base on in one of his videos, Golden Cross and Death Cross. The green line is your bullish signal, basically, and the red line's your not bullish, bearish signal. So typically, I guess when they cross, that is your buy point. And then when they cross back, that's your sell point. As you can see, at least with Winnie, that works perfect. It would have you sell right here, but that's all right because you buy back in right here, and then you ride the wave all the way up through the power hour. So it worked really well with Wimmy. Doesn't always work. I've gone through other things, so I'll look at Wafu the same way. And well, hold on, we got that EMA chart is. I don't know why that line does not go. I shouldn't even have switched. Should have just kept it. That EMA line, I have a lot of times. I have to scroll way out. See if I can just reset the chart. This is like what I was saying with Benzinga. I wish they wouldn't. I think they're integrating through TradingView is what causes glitches like this, where you see that red EMA line is not even populated. So I can't really show you too well, but basically I'll just be able to tell you is this spike, while you could ride it, it just didn't, I don't know, the indicators did not react like you would want them to. So you just got to keep that in mind. It's not always cut and dry. That's a buy, that's a sell. I'll go over all these indicators in order of what I would actually prefer to use. So double EMA is not my preference from what I've tested. I'm going to go back to the Winnie chart because I really don't like the Wafu chart very much. So yeah, as you can see, that red EMA line is not there. And as I scroll out, you see the red EMA line populates itself. So I don't know. It's just a weird little glitch in there. But I'll go to EMA Cross, which is very similar. EMA Cross uses, I think, 9 and 26 on the EMA. And the one thing I like about EMA Cross is that it actually gives you the cross mark on the chart itself. They're also a little bit closer together than the EMA 50 and EMA, obviously, since they're 9 and 26. But it's the same idea. The green line is my bullish, the red line is my bearish. It's the exact same idea of the double EMA. It's just with 9 and 26, you're getting a little bit more of a, I guess, fine-tuned. It's going to be a little bit more fine-tuned, which is also going to scare you out of a position too early because it's more. So that's something to keep in mind with that as well. And all of these indicators are going to change drastically if you switch to a 10-minute, your lines change quite a bit. So you'd have to keep that in mind as well. Changing to 2-minute, 10-minute, 1 day, that's all gonna change quite a bit. VWAP versus volume over weighted moving average. Same idea. You're still using a cross symbol. The problem I have with it is when you have volume spikes like this. So you've got a massive volume, well, I'd say volume drop, not spike, but you see a massive volume drop right here. So that red line just jumps right over. And technically that would be a sell. Why would you want to sell there? So I'm not really confident in this particular setup either. I'm just showing you these because they do work, but the reason I'm showing them to you is because the final one, CCI, which is commodity channel index, I believe. This is a really good, I found it to be really, really good back testing on all types of different tickers. You can use one. I'm using two in here. You'll see I've got a 40 and a 5. They are lower signals, just like RSI. It's kind of the same idea when it breaks this dotted line, which is set to positive 100, and then the below but dotted line is set to negative 100. When it breaks those are buy signals, depending on how you've got them set up. So by using two of them, you've got a long term, which is 40, and the short term, which is the 5. And so you're actually looking for the long term to be above 100 and the short term to be above 100, and that's your buy. Your sell would not be technically until the long term gets below negative 100. I don't like that. It basically whatever you think your risk is. So I prefer actually 0 for mine. But you could even do, if you're don't have a PDT rule, you could easily do when it falls below 100 again. You're just going to be doing a lot of trades by doing that. But the reason I really like this chart or this indicator is on WIMI, for instance, you have a buy on WIMI at 7:45 in the evening. Overnight hold. I don't know if I haven't really back tested it too much on overnight holds, whether that would stay true, but you'll notice at 4 a.m. the buy signal's gone because the short-term CCI is under 100. So that's not your buy anymore. Your buy is when it's above, when you're using multiple indicators. But had you bought it the night before, you'd still be holding it. You're not looking to sell it yet until basically all the way down here, at least on my setup, where it crosses below 0. Like I said, your risk reward could be however you'd like it to be. And then it's the same thing. You're getting a buy signal here at 12:55, way before. So not only do you get to ride this fucking short squeeze, you're riding this just slight consolidated uptrend, which is part of the short squeeze. That's what all these little red dips are. As that broke high a day, people started to cover, and then you got the massive short squeeze right there at power hour. So it's a really good indicator. I like using it with the two setup, but you can use it with one. If you go to the Learn to Win section, this is where I learned all this. I just learned about CCI. This is not an old trick that I'm teaching you, but I back tested it quite a bit, and it's a really good indicator to use. I gotta say, I haven't seen many problems with it. I will show if it will populate. Let's see, Wahoo, because it was actually one that did not quite follow the trend. So yeah, it populated just fine. So your buy would be right here. So yeah, you're getting to ride that spike, fine and dandy, but your sell is not until it's almost all the way at the bottom of that. So I mean, that just seems like you miss this entire bit of profit. I feel like the sell signal, I mean, if you use as soon as it dropped below 100, you would have been selling up here. So very conservatively, just an example, yeah, however you want to play it. Me not being able to day trade more than 3 trades in the rolling 5 period, I'm not going to be using that 100 mark, but that's best risk reward for sure. As soon as it drops below that 100 mark, you're selling, and you just made from the bottom to the top off of an indicator. It does work real time. I tested that quite a bit as well, because a lot of these indicators, when you look at them in hindsight, don't show you what it would look like in real time. But this one does. It does a pretty good job. Again, we'll look at another one. What was it? PSV. So PSV, same thing. You do have I guess a buy here, sell here. You're really not making too much there. I guess your entry, you would have made a little bit, what, 75 cents, sell at 85 cents, 10 cents on it. So you got to expect that kind of action where you're not going to make this huge ride. It's not like telling you that this stock is about to blow up. It's just giving you good buy and sell points. Same thing, and this is one reason why I use the 0 and not 100 as my my risk, because your buy is right here at 83 cents, and if you used 100, you would have made something. I mean, 93 or $1.02, you would have made a good 20 cents on it, selling right there, but you missed this whole ride. I guess you could buy back in right here and take the ride up. But again, you're selling here if you're using 100 line, which it does dip. So, I mean, you're just missing the next. So like I said, if you can day trade all day, more power to you, and use that 100-100 risk ratio. But I can't do that. So that's really what I wanted to show you with the indicators, man. I mean, if y'all have any questions, y'all can bring up I'm trying to think of a really bad stock that was really volatile that I could bring up. If anybody can think of one recently that was just up and down volatile. Unfortunately, I would say LKNCY, but
CYDY.
Oh, okay, it does bring it up. I was afraid it wouldn't bring up the chart because it's OTC, but it did bring it up. So the OTCs are 15-minute delayed. So I mean, it's again same thing. You've got to buy and you ride up this whole wave, and your sell point at 50. So you're selling here. You're not quite the top, but pretty damn close. And you missed that massive crack. Now this is one where you wouldn't see, like, you can't catch dips using CCI. There's no buy point on this bounce. The buy point is way up here. So you miss that entire bounce. So that's one thing that I did notice, is it doesn't catch a crack, like the bottom of a crack. It just doesn't. It's not made to do that. That's why I wanted to show you a volatile stock. We'll look at CYDY too. Yeah, I mean, CYDY, same thing. You've got to buy here and no real sell. So if you're watching this, you're pretty close to that sell point for me of 0 right here, but it doesn't quite get there. So it's just like I said, again, all a matter of your risk and how much you want to lose on profits when it cracks like that. But generally speaking, on a massive crack like this, you're already out right here, way before the crack. WKHS. Would I pair it with MACD to catch the crack? No. Oh, you mean to catch the momentum crack on the bottom of a crack? I don't know. We can check. I didn't pair it with any of these. I wanted to test all of these indicators separately. I did start to put some of them in the same thing, but yeah, I mean, you're getting a cross at the bottom of the crack. So, I mean, yeah, and it did on I guess if you're using the short term, you notice the short term try puts you a buy right at the bottom of the crack. Not quite right at the bottom, right in here. But the MACD is right at the bottom almost too. I mean, you're pretty much missing the bottom by a little bit. So yeah, you could use MACD to catch the momentum. It's the same thing on this crack. No, the MACD doesn't change right here, but that's a small bounce. So you wouldn't be able to catch those small bounces still. And I say that's a small bounce, but it's like 30 cents. But yeah, on the massive crack, I could definitely see that working. Adding the MACD there. Let's see. What about stochastic? I don't use that. Is that an indicator? Stochastic.
Yes, that's another
Stochastic.
indicator I have.
RSI or not RSI?
No, it's not RSI, but it's an oscillator just like RSI.
Well, I
And the
know, but I'm saying
CCI channel is.
in Benzinga, there's a stochastic and a stochastic RSI. That's why.
Oh, I mean, it's more difficult to explain than what I have time for in this chat. I do have notes taken down on stochastics.
Well, it's really hard to see those crosses. Are you looking for the lines to cross? Because yeah, the line to cross catches that bottom perfectly, but it's really hard to see.
Yeah, that is what you're looking for in essence. But like I said, that's a day trading 101 video in the pipeline. So what I can say, if y'all want to know more about it, look up Investopedia. Otherwise, wait for my video to come out because I will be looking into that. I think this week
Let's
it's
see.
on the schedule.
Yeah, it catches the bottom of the crack right there too. But I mean, you're not pairing that with CCI. I mean, because the CCI indicators don't tell you anything right there. Right at the bottom of the crack when that line, stochastic line crosses.
Yeah, stochastics usually
CCI
pair
doesn't
with.
tell you anything. Yeah, I wouldn't. I mean, maybe add it to your chart to just have you just catch it bottom of the crack for that sole purpose. Yes. And then you could watch CCI and see if it starts to spike to tell you whether, when to get out of it. But that's it. So you wouldn't be using that long-term CCI on this crack. So you would actually want to use your short-term to tell you when to sell. So when it drops all the way down, I would sell. I mean, you get scared out. It's dropping all the way down just because of that red dip. It's not even a dip. But that would be my sell. Recommended KPI numbers on CCI. I use 40 and 5.
Yeah, I agree. 40 and 5 are definitely what you want.
Yeah, 40 and 5. I went through a lot of them because some people use 20 as their long term, 30 as their long term, 40. I actually went to 90 as my long term. And that actually worked pretty good too, to be honest. I do want to show you actually while we're talking about it. We'll talk about a big stock. No, wrong one. AAPL. So I'm not going to look at the daily or the intraday chart. I wanted to show you the daily chart. So it's really the same thing with the daily chart, and this is where if you're using the daily chart, let me see. I think it was 90. Worked really well. Yeah, 90. So 90 on the daily chart here. Your buy is here, and well, actually you're selling it here, but you've got a buy order here, right here, and you're gonna ride that wave all the way up. It's not even cracking below 100 on any of these. This red day doesn't crack it below 100. You're not getting scared out of your position all the way up, and then as soon as it cracks below 100 is when I would sell. On it. That's a massive swing, by the way. That's months, people. But that's just it for if that's something you want to do. If you're a long-term investor, CCI works just as well long-term as it does short-term. It was created for commodities, but it works across all markets. That's why it's called the Commodity Channel Index. So I did want to show you that on a big ticker. It works pretty well on the long-term side. It doesn't work really well on the short-term side. Not much. The other thing I wanted to show you guys real quick is QuickFS. So for those of you that don't have Benzinga Pro, this would probably be the best place to get those financial numbers that I'm talking about. You do have to pay for quarterly. You can look at the overview screen quarterly, but if you want to go to their balance sheets, income statements, stuff like that, you've got to get the premium membership. But if you want to do annual, which is just a year, you can see the income sheets, balance sheets, cash flow statement, whatever, the key ratios all the way across. And what we're looking at is WIMI, and WIMI has amazing numbers. I don't know if anybody looked at the general section. I posted the Motley Fool article on WIMI, and they get all their revenue off of advertising. It has nothing to do with the holographic stuff. They do have holographic tech though. So keep that in mind. But Cosmic go over all that, I'm sure. This little deep dive video. But I do want to touch base on if you're thinking about shorting WIMI, I'd be careful. Like on Monday, just because of these numbers. These are ridiculously good numbers for any stock, not just a penny stock. Crazy good good revenue and financial. So just be careful. I'm not saying it won't be a bad downside short, but I would play more Tim Grittani's style of, first red day and red to green, green to red risk. Or I always flip that around, green to red, red to green. But you got me. That's pretty much what I wanted to talk about, man. I wanted to go over all these indicators that I've been checking out for the past week or so. And like I said, I've been back testing them pretty good, and they all work. They all have their, check them out, see which might work best for you. I think CCI is by far the best indicator I've ever seen in telling you when to buy, when not to. Like I said, it changes drastically when you change that 5 minute, 1 minute, all that kind of stuff. Those indicators change drastically. So you're going to have to find the one that works for you, that works for your trading style. Because, yeah. So that's pretty much all I had, man. So I assume we're going to take a break now, and Cosmic take over here in a minute. But if anybody has any questions, I will answer them real quick.
Yeah, we'll take 5 minutes for Q&A right here.
Look at fun. Yeah, we can look at fun. On which one? The CCI? Let me reset the chart. Make sure we're in the right spot. Man, Fun's got that barcode shit going.
Yeah, it's choppy as shit.
You just want to look at the last day?
Yeah, he's saying it's indicating a golden cross.
I mean, right now, at the end of the day, it's already a sell on CCI. So I'm not sure there. But if you're talking about a golden cross, I mean, we could look at Ema Cross or double Ema. Let me change this to fun. And reset the chart. And my red line is not there. And screw you, red line. There it goes. Yeah, it did right here at 115. So, and that's something that you, I guess, could keep in mind, and that's why I actually plan to use, I've got these set up right now. I'm not changing that. I'm planning on using all of these indicators. My kitchen sink is still going to do, the one that I look at normally is still just going to be nothing, no volume, no nothing. All I want to see is the candles. But I'm going to have all these indicators there in the research tabs so that I can, check them out. But yeah, I would say, look, I mean, you're right. The Golden Cross is there for funware. It never crossed back. It came close right here, but it never crossed back. But that's not a lot of price movement. I mean, you're looking at 1 cent, 2 cent. So I don't know. It's up to you. If I wouldn't play it, me personally, just because of the CCI. CCI is showing bad on both fronts at the end of the day.
Smart to use multiple indicators.
What'd you say?
I'm sorry if I entered. Oh, I'm so sorry if I interrupted you. That your voice is lagging on my end. That's my bad.
Oh,
I was just saying that that's why it's important to use multiple indicators. I mean, yes, play the chart. Um, Gritani doesn't use indicators. He straight up uses candlesticks, but
yeah.
Gritani has been doing this for 9 years. Like Sykes has been doing this for 20 years. They don't need indicators. And to me, once I see what these indicators are showing me, I can essentially have the indicator running in my brain. And that's how come a lot of super successful traders are like, I only use RSI or I only use one type of indicator because you don't need the others. Well, it's because they back tested it. They tested to see which ones compare, which ones they like the best and fits their trading style. So that's how come I'm not going to stop making these day trading 101s, because indicators are there to help you figure out what is your best trading style and what you like to use. Um, doesn't mean that I'm going to be using them that
Daily
at
chart.
all. But anyways, that's all I got.
I'm looking at the daily chart now, ODT. Oh yeah. I wouldn't even say the end of the day Friday. It was already. Oh wait, where's my red line? Never mind. There it goes. The daily chart. I don't know. It's been positive for a long time. I wouldn't use that on the daily chart because your 200 moving average is greatly skewed by this big spike. I don't like I don't like some indicators on the daily chart at all. That CCI indicator seems to be really good on the daily chart. We can look at one real quick. So, I mean, yeah, according to CCI, you should have bought it on the spike of that one day, and you wouldn't have sold it yet if you were swinging. That's on a 90 though. Hold on, let me change that to 40. I do like the 90 daily. See what the now it looks any different. But test that out. Yeah, test the CCI out because it changes based on the weeks. Because basically these numbers are price bars. So that's 40 price bars that it's using for its CCI, and that's 5 price bars that it's using for its CCI. So when you change it to a week, that's a price bar. That's what that is. So it's counting 40 of those, or 5 of them. So as you can imagine, it would change drastically when you put it on 15 minutes as opposed to the other way.
I will touch on your question, Jay, in my segment.
So, all right, well, I mean, yeah, I'm trying to look at your. Well, oh, you're using moving average. That's why. That's EMA. That EMA and moving average is drastically different. Yeah, that's the difference there. Why it's not looking the same. Yeah, I mean, I can pull that up, but I mean, you've got it right there. But to answer your question, CCI doesn't show a buy on it right now. CCI shows a sell. So
Honestly, to me, the chart shows a sell too.
anyway, let's do that 5-minute break, guys. Unless anybody has any more quick questions, real quick. We're kind of dragging it on now. But yeah, we'll take a break. Cosmic will take over.
Yeah.
And we'll wrap it up after Cosmic as well.
Yeah,
Questions
for sure.
and all that good stuff.
I like taking the breaks to anybody. If you have a question for any of us in particular, just add us. Put it in the question, like in the way that Jay is asking the questions is the way that I want it to be. JDO5, just because it's easier for us to see that. Also add us so we can have a particular person answer. But yeah, we'll take that. You know what? It's a little bit longer than 8 minutes. Let's give it until 10 p.m. Eastern. That's 9 p.m. Central and 7 p.m. East Western.